Once again, thank you for joining us today for our conversation on financial aid. This session is going to provide you with a high-level introduction to financial aid. We're going to discuss some basic terminology that you hear thrown around in the world of financial aid. We're going to talk some basics of the process itself and applying. We'll talk about some of the most common types of financial aid that students receive to assist in funding and education. We'll provide some common questions that you should be asking of different colleges and universities as you go through this process, and then wrap up with providing some information on how to have any questions that you may have answered. So let's begin by addressing some of the terminology. Financial aid, I know, can be a world where it feels like we're speaking a whole different language. There are acronyms, there are phrases that are very specific to the world of financial aid, and we want to spend a little bit of time demystifying that part of the process. So a handful of phrases that you will see thrown around frequently. First, a couple of the applications to clarify. One that most all of you will want to complete is called the FAFSA. This is the free application for federal student aid. This is the application through the federal government. So it is something that you'll want to submit it at most any college or university in order to see whether or not you will qualify for federal aid programs, which we'll discuss in a little bit more detail later on in the presentation. The key word in this title is free. You will find some websites out there that will charge you a fee for submitting your FAFSA. These are third-party websites that are not necessarily providing any value add. The free application is hosted online at fafsa.gov, is a government-related website and application for which you should not have to pay any fee to submit. The second application that you'll hear referenced frequently is the CSS profile, the College Scholarship Service Profile. This application is supported through the College Board. This is the same organization that you've maybe heard about related to exams like the SAT or Advanced Placement exam. This application is accepted by a number of colleges and universities, but not necessarily all institutions will require it. It's a little bit more detailed than the FAFSA. There is an application fee associated with the CSS profile, but there are application fee waivers available for students who qualify to ensure that the cost of that profile does not become a barrier to applying. Some of the terms that you'll hear us throw around commonly include cost of attendance. This is a term that is a little bit more inclusive than just tuition. The question that I think I get most often is, what is your tuition? But tuition just reflects the fees directly for the educational costs, essentially. What it doesn't include are things like a transportation or technology fee. It doesn't include living expenses like the cost of a residence hall or a dining plan. It doesn't include things like transportation allotment or incidental fees, things like purchasing a laptop, buying books. All of those sorts of additional costs, though, reflect a portion of the cost of attending a college or a university and are reflected in this more all-inclusive cost of attendance. So as you're talking colleges and universities, as you're reviewing websites, don't just look for tuition, look for cost of attendance. It will give you a clearer expectation of the overall costs associated with attending that institution. The next term here is the expected family contribution, or shorthand, the EFC. We'll dive deeper into a conversation about how this number is calculated, but at the highest level, this is the number that is determined for how much you and your family can contribute towards college educational costs. It's very important to determining financial aid eligibility, and again, we'll spend some time diving deeper into this in the presentation. Methodologies are something that you'll hear discussed, including the federal methodology. This is the formula associated with the FAFSA that is used to determine your eligibility for federal financial aid. And this formula is approved and determined by Congress. It's actually written into federal regulation. Another term that you'll hear thrown out there a lot is need. The need for an individual student is the difference between the cost of attendance and the expected family contribution. You can think of this as essentially the amount of financial aid necessary to make an individual college or university a feasible option for a family financially. The other methodology that you'll hear a lot about is the institutional methodology. This is a formula that individual colleges or universities set independently and may use in determining the eligibility for their own financial aid for college-specific grants or scholarships. So this methodology is not standardized across colleges and universities in the way that the federal methodology is. Another phrase that you'll see thrown out there is need blind or need aware. This refers to an institution's admission policy, not financial aid policy, as it relates to financial aid eligibility. At a need blind institution like Carnegie Mellon, your eligibility to receive financial aid, your status as a financial aid applicant, are not looked at when making determinations about whether or not to offer a student admission to the institution. At a need-aware institution, they might use certain financial data in making admission decisions and determining whether or not to invite a student into the community. So as you're looking at different institutions, as you're reading about their policies, these are two terms that you will see to distinguish between those two practices. The net price calculator is an online tool that a family can use to get an estimate of their need-based aid eligibility and to determine the affordability of an individual campus, even prior to applying for admission. Net price calculators are federally mandated for any institution awarding federal financial aid. So while each campus has some flexibility in setting their own calculator, their own tool, you will find that it is a broadly available resource on admission and financial aid websites. The concept of merit is one that requires a little bit of definition here as well. A merit in the world of financial aid refers to grants or scholarships that are awarded based on a student's academic, artistic, or athletic ability. It is not tied to a student's financial need. It's not tied to a lot of the formulas like these methodologies that we've talked to, but is awarded based on another set of criteria around academic, artistic, or athletic merit. So know that there's a distinction made there between need-based and merit-based financial aid, which here at Carnegie Mellon, all of our financial aid is awarded on the basis of financial need. We do not offer merit scholarships based on academic or athletic merit. And then the final term that I want to note here is outside scholarships. And this would refer to any scholarship that you're receiving from a source other than the college or university that you're attending, or from the state or federal government. So let's say you've applied for and you've received a scholarship from your local building and loan association or from a local nonprofit. That would be an outside scholarship that you could bring into that college or university to assist with covering the cost of attendance. Each college or university will have their own policies on how they treat outside scholarships and whether or not it would impact your eligibility to receive any institutional aid. So also keep that in the back of your mind as you are going through this process. I now want to shift to talking a little bit more about some of the basics of determining financial aid, a little bit of what's happening behind the scenes as you go through the application process. And the first thing to actually talk about is what exactly is financial aid? Well, financial aid encompasses any sort of financial assistance that helps a family to cover the cost of attending a college or university over the course of a 9-month academic year. This could be either need-based or merit-based, both of those pools of funds that we previously discussed. It can take the form of gift aid. This is broadly what we refer to when we talk about grants or scholarships. This is the type of aid that a student receives without strings attached. They don't have to work or repay that financial aid. And then third, they may receive some sort of self-help. Self-help aid includes loans or work study awards. This is the type of aid that you either do have to pay back over time, or that you will have to complete a job and receive a paycheck for, respectively, in those two types of assistance. But note that a financial aid offer, a financial aid award, can include a combination of both gift and self-help aid at most institutions. And sources for financial aid do vary. It can come from a state or federal governmental source, for example, the Pell Grant program from the federal government, or here in the state of Pennsylvania, where Carnegie Mellon is located, our FIA grant is our higher educational grant program. It can come from an outside or a private source outside of your family, those outside scholarships that we just talked about, or it can come directly from the institution in the form of an institutional grant or scholarship, which here at Carnegie Mellon is our largest source of financial assistance for our undergraduate students. In terms of actually talking a little bit about cost and how this all breaks down, you're going to find that both institutions and you as a family are going to be working within budgets when it comes to financing education. And that different institutions are going to have different policies and different costs related with the way that they're managing their own budget. But some of the things that you want to look at in those budgets to really understand the bottom line cost of attending an institution are going to include that overall cost of attendance, which if you look at the bar chart that you see here, would encompass the gray, the blue, and the red portions, the portion covered by scholarship, by loans, and as out-of-pocket expenses. This would be the total cost of attendance or the sticker price of a college or university. What you don't want to do is make a decision on where to apply based on that sticker price. Take advantage of opportunities to complete things like a net price calculator to get an estimate of what your aid eligibility would look like, because things like grants and scholarships come directly off that cost of attendance. They reduce that sticker price to a net price that includes the self-help financial aid that you would have to pay back over time or work for, as well as those out-of-pocket costs that you or your family may be directly subsidizing through contributions from income, from drawing down upon assets, from a private borrowing, for example. In this particular graphic represented by the blue as the loans and the red portions making up that net price. So make sure as you're comparing institutions and you're comparing costs that you're comparing net prices and not sticker prices. A few things to know before you really go into this process. First, know that every school will vary in their policies and their practices and in their net price calculators. A net price calculator, as I mentioned, is mandated at every institution that accepts federal funds. These calculators vary in terms of their complexity, their ease of use, and by extension, their accuracy. Most are anonymous and will not require you to provide personal information to the college or university. But many do give you the option of receiving a report emailed to you at the end of the process that will show your inputs and the estimate so that you can share this with a financial aid advisor at the college or university to have more of a conversation and understanding your eligibility. That is something that we make available here at Carnegie Mellon when completing our net price calculator so that you could schedule a time to sit down with an individual like myself or my colleague Drusella to talk through that output and to talk through your eligibility. One thing that I do want to note is that these net price calculators, they're asking the most common questions and data points that drive aid eligibility, but what they might not account for are some special circumstances out there, like if you're experiencing a reduction in your income, or if you have significant unreimbursed medical expenses. It's always recommended to have a conversation directly with the college or university if you're experiencing these types of circumstances, because they may not be accounted for in that net price calculator. So let's shift our focus and talk a little bit about the process of determining need-based financial aid. A need-based financial aid offer is a combination of grants or scholarships, that gift aid that you don't have to work for or pay back, alongside federal work study or loan programs. In many cases, institutions are working to meet your financial need, but might not be in a position that they're able to meet that full need, meaning that the combination of your expected family contribution and that financial aid offer that is put together might leave a gap, might leave something that there's a question as to how it will be made up in the process. Know that here at Carnegie Mellon, we are committed to meeting 100% of the demonstrated financial need for all U.S. citizens, permanent residents, and DACA recipients who are offered admission as an undergraduate. That means that we will put together a combination of the grants or scholarships, work study, and loan programs that are equal to that financial need. Not all institutions are guaranteed to meet full needs, so that's another policy to keep an eye out for as you're going through this process. In diving a little bit deeper into understanding some of the components of this calculation, I want to go a little bit deeper into your expected family contribution. The expected family contribution is that amount that is calculated using a combination of the institutional or federal methodology that evaluates a family's ability to pay over a 9-month period for a college education through a combination of strategies that include direct contribution from income, drawing down upon liquid assets, and borrowing against illiquid assets. Each individual family's expected family contribution will reflect their own financial circumstances and strengths. So it's not necessarily a calculation where you can say at this income level, you will have this EFC, because additional asset information, for example, can play a role. Again, this is a combination of the federal or institutional methodology at most institutions. They're not relying exclusively on one or the other. At some institutions that use only the FAFSA, they will be relying primarily on the federal methodology. I also want to note that this expected family contribution is a standardized process to evaluating a family's ability to contribute to a college education. What the calculations, the methodologies may not be factoring in, though, is a family's willingness to contribute to that education. It's an evaluation of financial resource and strength. So how exactly do we go about determining that expected family contribution? Well, there's going to be a review of some income and non-retirement asset data that includes both your taxable and untaxed income, as well as information on any savings, investments, properties, or businesses that the family holds. This information is what's used to begin determining that direct contribution from income, that drawing down on liquid assets like a savings account, or borrowing against an illiquid asset like a property. There are also a series of allowances built in. These allowances are going to protect portions of your income or your assets in a standardized and equitable way across applicants. You'll notice that you're not going to be asked questions about your outgoing expenses. You know, what is your monthly electric bill, for example. But these allowances account for the fact that you and your family will have other expenses. So it's going to look, to give you a few illustrations, at things like the relative cost of living in your region. For our institutional methodology here at Carnegie Mellon, that's at the zip code level, recognizing that a student living in Manhattan experiences a very different cost of living than a student living in Katanning, Pennsylvania, a rural community a little ways outside of Pittsburgh. We will protect a greater percentage of income for families in higher income, higher cost of living areas. It will account for a protection allowance for educational savings for a younger child. So if you have younger siblings in your household, we recognize that your family has a commitment and a responsibility to setting aside money for that younger sibling's future education, and that portion of your savings may not necessarily be available to fund your education. The number of individuals in your household is very important, recognizing that it will cost more to put food on the table for a larger household than a smaller household. And also we'll look at the number of students, number of children in the household concurrently enrolled in college. Once again, recognizing that a year in which both you and a sibling are in college doesn't inherently mean that your family has twice the resources, but that they're distributing those resources over multiple students at that time. There are dozens more protection allowances, but these are 3 of the more common ones that I hope will help to illustrate some of the ways in which these calculations use some of the demographic information being collected about where you live, about your household and the makeup of your household in providing for these protections in the calculation. Some of the steps in the application process to overview. The first thing that I want to highlight is that the income information that you use is from the prior year. What this essentially means is that you will step back in time 2 years from the start of the academic year in which you're applying for aid and use that year's income data. So for any rising current seniors on this call, that will be 2021 calendar year income. This will be the tax returns that you would have submitted earlier this year, reflecting your 2021 income. For any rising or current juniors, this will be 2022 income data for your first year. And for any rising or current sophomores, it will be 2023 income data that you will first be asked for. At Carnegie Mellon and at many other FAFSA related schools, there's a tool called the data retrieval tool, the DRT. This data retrieval tool allows you to have the income data from the prior year directly transferred from your IRS records onto your FAFSA. The advantage of using this data retrieval tool is one of accuracy. It will reduce the likelihood that you will be asked to provide additional documentation in the form of tax documents as a part of your application. There still may be criteria where that would be requested, but the data retrieval tool greatly reduces the amount of additional documentation that is typically requested. For that CSS profile, as I mentioned, there is a fee of $25 for the first submission and $16 for any additional submissions to a second, third college or university. There are waivers available to waive that particular fee. Any student that qualifies for an SAT fee waiver who has a adjusted family income of under $100,000 or who is an orphan or ward of the court under the age of 24 will automatically qualify for a fee waiver through the College Board. In terms of timelines for this process, I'm going to note that the timelines can vary greatly and that you want to keep in mind not only college or university timelines, but also government timelines here. So here in the state of Pennsylvania, there's a May 1st deadline for applying to be eligible for Pennsylvania state grants. This timeline, though, is very different in different states. You'll find that some states have a recommendation that you submit as soon as possible after October 1st. Their process is that they award funds in the order for which they're applied, and when the well runs dry, the well is dry. So you want to know your home state's policies when it comes to your state grants and to plan accordingly for submission of your FAFSA. Institutional deadlines will also vary from college to college or university to university. Here at Carnegie Mellon, we have a soft deadline of February 15th. I call this a soft deadline because if you apply on March 1st, you'll qualify for the exact same amount of money that you would have qualified for on February 1st. The well does not run dry. However, it will delay notification of your financial aid eligibility. We commit that for any applicant who has submitted their materials prior to February 15th, we'll be able to provide you with a financial aid offer, usually within a week of making an offer of admission. If you've applied after February 15th, it may delay your notification of your aid eligibility and will then shorten the runway that you have between receiving your financial aid offer and the enrollment deadline, which here at Carnegie Mellon is going to be the first weekday of the month of May. That I believe will be May 2nd for the upcoming application year. As I mentioned, there are a variety of different components that can make up a financial aid offer, and I want to spend a couple of minutes talking a little bit about those components. Types of financial aid will include federal or state grant programs. Examples of which I shared earlier are the Pell Grant at the federal level or the FIA grant at the state level here in Pennsylvania. It may also include institutional grants or scholarships. This is the gift aid that you don't work for, you don't pay back. And you'll find that different institutions, again, will have varying policies around awarding these funds on the basis of need and or merit. You'll find that there's the program out there called the Federal Direct Loan Program. The Federal Direct Loan Program is a loan in the student's name. Any U.S. citizen or permanent resident will qualify for $5,500 in direct loan funding in their first year, $6,500 in their second year, and $7,500 each in their third and fourth year of undergraduate studies. You can receive up to $3,500 of that in the first year in a subsidized loan and the balance in an unsubsidized loan based upon your expected family contribution and your financial need. A greater portion of the loan will be subsidized for students that have higher financial need. And a subsidized loan does not accrue interest during your time as a student. That's the primary benefit to the subsidized over unsubsidized version of the loan. Both come with deferment options to delay repayment during your time as a student. There's also a federal direct loan program out there. This is the federal direct plus loan program, which is intended for parents or caregivers to help in financing the college education of one of their children. In this case, it is in the parent's name. It does have a credit check component, and it does not have the same deferment options or interest rate as the loans available in the student's name. So we always encourage families that are thinking about that direct plus loan to also consider alternative loans from private lenders, from a bank, a credit union, loans that are educational loans, or if you have access to equity in your home, home equity loans, taking a look at different options to get different rates, different repayment schedules for you to consider. While the federal direct loan in the student's name tends to have some of the most generous loan terms out there, you may find alternative loans with more generous terms than the federal direct plus loan in parents' names. So to close out here, I want to spend a couple of minutes providing a few questions that you should be thinking about and that you should be asking institutions as you continue your college search in order to better understand their policies and practices. Do you practice need blind admission in evaluating whether or not your financial aid application will have any bearing on your offer of admission? Do you offer merit-based scholarships? And if so, are there criteria, are there requirements to qualify? Some institutions that offer merit scholarships have very specific cutoffs. Above a certain GPA, above a certain ACT score, a student will receive X scholarship funding. Do you guarantee to meet full financial need? As I mentioned here at Carnegie Mellon, we do guarantee to meet full need, but at many colleges and universities, that guarantee may not be in place. Here's an important one. Can you expect to receive a similar financial aid package year to year, assuming that my financial circumstances are consistent? Or will an institution revisit your aid award annually? Here at Carnegie Mellon, we do revisit aid awards annually, but your financial aid eligibility will renew on the basis of your financial need. So if your financial circumstances remain stable, you can expect a very stable financial aid offer here year to year as well. What's your policy on outside scholarships? If I bring in a $2,000 scholarship from a local nonprofit, will that reduce my aid eligibility at your school? Here at Carnegie Mellon, you'll find that it will not reduce your eligibility for Carnegie Mellon grants or scholarships unless the combination of the two exceeds our total cost of attendance. However, it may reduce your eligibility to receive federal financial aid, as the federal methodology does require that any additional funding sources from the college, university, or outside sources are applied prior to the application of a federal loan or grant. What's the deadline? What's the timeline for applying, and what are the materials that will be requested? When will I get my financial aid award offer or a letter, and how much time will I have to review it? How does the financial aid application or policy differ for early decision or early action students at your college? If the financial aid award is insufficient, how do I appeal? Can I appeal for more financial aid? And then if you have, again, any special circumstances, that experienced a reduction in family income, things along those lines that you maybe didn't see accounted for in the application itself, asking somebody like Drusella or myself to understand how that institution might take those circumstances into account is very important. I encourage you to jot down a list of the most relevant questions for you and your family, and to review college websites, to talk to college representatives, and to get these answers to help you make a more informed decision as you go through your college search process. I recognize you're also likely to have some questions, and